ARM mortgage, how does it work? Is an adjustable rate mortgage the right choice for you? This is a question that many homeowners are asking themselves in today's market. With interest rates on the rise, now may be an excellent time to consider an adjustable rate mortgage if you plan on staying in your home for a few years or more. Hello everyone, welcome to Success Wisdom. If you're new to this channel, do like and subscribe to the channel. In this video, we will talk about ARM mortgage, how does it work, adjustable rate mortgage. What is an ARM mortgage? An adjustable rate mortgage or ARM is a home loan where the interest rate may adjust periodically. An ARM typically starts with a lower interest rate than a fixed rate mortgage, but this rate may increase over time. Your monthly payment could go up or down depending on market conditions. ARM mortgage, how does it work? The monthly payments on your mortgage can go up or down. ARM mortgages typically have an initial period where the interest rate is fixed, then adjusts periodically. The adjustment's frequency depends on your mortgage's terms, but it can be as often as once a year or as infrequently as every 5 years. The benefits of getting an ARM mortgage. First, lower interest rates. An ARM typically has a lower interest rate than a fixed rate mortgage, which means you can save money on your monthly payments. Second, more flexible repayment terms. With an ARM, you may have the option to choose from different repayment terms, such as a shorter loan term or a longer one. This can give you more flexibility in how you make your monthly payments. Third, lower closing costs. Closing costs are often lower on an ARM than on a fixed-rate mortgage. Fourth, less risk. An ARM can be a good option if you think interest rates might go down in the future. If rates go down, your monthly payments will decrease. Lastly, more affordable payments. If you're concerned about making higher monthly payments, an ARM with a lower interest rate and initial monthly payments could be a good option. The potential drawbacks of getting an ARM mortgage. First, interest rate risk. One of the most significant potential drawbacks of an ARM is the interest rate risk. If the interest rates go up, your monthly payments will increase. This could make it more difficult for you to afford your mortgage payments. Second, adjustment period risk. Another potential drawback is the adjustment period risk. This is the risk that your interest rate will adjust and your monthly payments will increase during the adjustment period. Third, mortgage payment shock. Mortgage payment shock is another potential concern. This is the difference between your old monthly payment and your new monthly payment after your interest rate adjusts. If this difference is significant, it could make it difficult for you to afford your mortgage payments. Fourth, negative amortization. Negative amortization can occur with an ARM if your monthly payments are insufficient to cover the interest on your loan. This can cause your loan balance to grow, putting you at risk of foreclosure. Finally, prepayment penalties. Some ARM loans have prepayment penalties, which means you may be charged a fee if you pay off your loan early. Before you decide to get an ARM mortgage, it's essential to understand the risks and benefits. This type of loan can be a good option for some borrowers, but it's not suitable for everyone. Make sure you understand the potential risks and benefits before deciding. How to qualify for an ARM mortgage. To qualify for an ARM mortgage, you must meet the same basic qualifications as you would for a fixed-rate mortgage. This includes having a good credit score, a steady income, and enough money for a down payment. You will also need to prove that you can afford the monthly payments on your mortgage. If you're considering getting an ARM mortgage, talk to a lender to see if you qualify. They will be able to help you understand the process and answer any questions you have. If you like this video, don't forget to like and subscribe to the channel. How to choose the ARM mortgage. There are a few things to consider when choosing an ARM mortgage. First, you must decide how long you want the initial fixed rate period. This is a time when your interest rate will not change. After this period, your interest rate will adjust based on market conditions. You must also decide how often you want your interest rate to adjust. Adjustable rate mortgages can have interest rates that can change monthly, annually, or every few years. Finally, you need to decide what type of interest rate you want. There are two main types of ARM mortgage. Fixed rate. With a fixed rate ARM mortgage, your interest rate will be fixed for the loan's initial period. After this period, your interest rate will adjust based on market conditions. variable rate. With a variable rate ARM mortgage, your interest rate will adjust based on market conditions throughout the life of the loan. An ARM mortgage can be a good option if you're comfortable with your interest rate going up in the future. Remember that your monthly payments could increase if your interest rate goes up. Things to consider before getting an ARM mortgage. Before you get an ARM mortgage, there are a few things to consider. Number 1, are you prepared for your interest rate to increase? If you are not prepared for your interest rate to increase, an ARM mortgage may not be suitable for you. You need to make sure you can afford the monthly payments on your mortgage if your interest rate goes up. Number 2, do you plan on staying in your home for a long time? If you plan on selling your home within a few years, an ARM mortgage may not be the best option. This is because you're likely to have to refinance your loan at the end of the initial fixed rate period. And if market rates have increased, you may have a higher interest rate on your new loan. Number 3, are you comfortable with risk? An ARM mortgage is a good option for borrowers comfortable with their interest rate going up in the future. Remember that your monthly payments could increase if your interest rate goes up. If you're comfortable with risk, an ARM mortgage may not suit you. You may want to consider a fixed rate mortgage instead. Number 4, do you want the flexibility to sell your home in the future? An ARM mortgage can be a good option if you want the flexibility to sell your home in the future. This is because you'll likely have to refinance your loan at the end of the initial fixed rate period. And if market rates have increased, you may have a higher interest rate on your new loan. Finally, do you want to lower your monthly payments now? An ARM mortgage may be a good option if you're looking for a way to lower your monthly payments. This is because the interest rate on your loan will be lower during the initial fixed rate period. Remember that your payments could increase if market rates rise in the future. Is an ARM right for me? An ARM mortgage can be a good option for specific borrowers, but it's important to consider your options before deciding on a loan. Talk to a lender if you're unsure if an ARM is right for you. They can help you understand the pros and cons of an ARM mortgage and compare it to other loan options. Whether you are a first-time home buyer or have been in your home for years, it is essential to understand the different types of mortgages available. An adjustable rate mortgage or ARM may be a good option if you plan on staying in your home for a short period or want to take advantage of lower interest rates. If you would like to pay off your mortgage early, there are several steps you can take. We hope this article about ARM mortgage, how does it work, was helpful and provided some valuable information. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to the channel, and comment below. Thank you and goodbye.